Servus and greetings from Vienna. My name is Anita Posch. Thank you for listening to Bitcoin & Co., my podcast that's introducing the philosophy, ideas and people behind Bitcoin. Hello everybody, thanks for tuning in again. It's 3.5 weeks before I'm going to Zimbabwe and Botswana, and I'm getting more excited every day. I'm still reaching out to potential sponsors and supporters. I found the first supporter in Peter McCormack, the host of the What Bitcoin Did and the Defiance podcast, who sponsored my flights. Now, the company GoTenna also supports my trip, donating some of their GoTenna devices that can be used to set up a mesh network to transmit text messages and Bitcoin payments even when there is a power or internet outage. On my crowdfunding page, I received about $30 so far. Thank you all for that. It would be great if I could reach at least $300 on the crowdfunding. Then I could donate the parts for 2 Raspberry Blitz devices, which is a Bitcoin and Lightning network node, one for each community I visit. You can support me via PayPal, Bitcoin and Lightning at bitcoinandco.com/en/donate. If you're representing a company and are interested in working together, please send me a message to hello@anitaposch.com with a C, the Posch with a C, and I will send you more information about the sponsorship opportunities. Thank you. My guests in this episode are Patrick Csokorda, Josef Tetek and Tomass Marada. We met at the Hackers Congress in Prague. They are working on a project called DEBNK, spelled DEBNK. Their goal is to build global peer banking on top of the Bitcoin settlement layer. This trustless third layer on top of Bitcoin will be able to store different assets and make stablecoins obsolete. We talk about how this will be implemented, the use cases they see, and about volatility and price discovery in Bitcoin, the block subsidy, the halving, and Bitcoin in the Czech Republic. At the moment, the development team is looking for grants to bootstrap the MVP, the minimal viable product. Patrick and Tomass just launched a Bitcoin quant fund called Hedge.Capital that will also serve as funding vehicle for DEBNK later on. Before we start, a message from my sponsors. If you want to be independent and secure your personal financial freedom with Bitcoin, you have to hold your own keys and must not use a custodial wallet. So if you're one of the people who thinks of investing in Bitcoin long-term in the most easy way and who prefers not to use a hardware wallet because it has to be maintained, doing firmware updates and more, or you just want to gift someone Bitcoin, then the card wallet is for you. You'll get one Bitcoin address, you can send Bitcoin to it, and all you have to do is to store it in a safe place. That's it. The manufacturers are the Austrian State Printing House, which is also responsible for the Austrian passports, and Coinfinity, Austria's first Bitcoin broker. Order your card wallet at cardwallet.com/Anita and get 20% off. Now on to the show, and as always you can find all recommendations and links mentioned in this episode in the show notes on the episode page at bitcoinandco.com. There you can also find a books page with all reading recommendations from my guests. bitcoinandco.com with an U. Please subscribe to my show in your favorite podcast player, come back for more episodes and share it on social media. Today is a premiere. Today I have 3 guys in one interview. That's the first time for me. It's Josef Tetek, Patrick Csokorda, and Tomass Marada. Hello, welcome. We're here at the Hackers Congress in Prague. It's my first time. Have you been here before, Patrick?
Yes, I was 2 years ago, actually. I missed last year.
Okay, are you from Prague?
We're from Prague, yes.
Oh, yeah, then it's easy to go. You founded a company called DEBNK. We'll get into that later, what that means. Please introduce yourself. What did you do before you came into the Bitcoin space, Patrick?
I started to read up on Bitcoin on the break of 2016, 2017, at that time, I was still running my financial technology startup. I built 2 companies in fintech, so on traditional rails. It was a payment company, and I exited in 2018. Actually, after 2017 peak, I thought this is something very interesting, so I just exited that startup and I focused fully on Bitcoin. But I started to read up on Bitcoin from technology point of view, and I ended up appreciating the monetary policy of it. So
we'll get into that later. Yeah, Josef.
Yes, hi. So I'm from Prague as well. I was actually born not that far away from Prague, and I've lived in Prague for 30 years, and I rarely travel out of Prague. My background is economics. I studied economics itself, and I was always attracted by Austrian School of Economics. We have quite a nice background in Austrian school here in Czech Republic. Sometimes people say that it should be renamed to Czech School of Economics because it's more popular here than in Austria. And I and a couple of friends founded Ludwig von Mises Institute, Czech and Slovakia in 2010. And we've been having summer schools and published books ever since. And at the summer school, I think 2010 or 11, we had a talk about Bitcoin, and I was kind of interested in that, but didn't pay much attention that far back. So I bought my first Bitcoin 5 years later or something, and then I gradually went through the rabbit hole of learning about Bitcoin until I actually went full time into Bitcoin and cryptocurrency consulting, analysis, and writing.
When was that?
That was actually by the end of 2017. I felt rich by then, but I huddled. So later on I found out I still have to work. But I think that was quite a good experience because it forced me to really focus on, like Andreas always says, on education, not speculation. So I educated myself more and tried to find out good long-term projects, and it eventually went to meeting Patrick and Tomass and thinking about stuff like financial contracts on top of Bitcoin, which is basically DEBNK.
And all 3 of you, are you working full-time in the Bitcoin space? So no other jobs, no classical, in the other? Actually,
I'm working with a software development company, Tomass, which is unrelated to DEBNK. What I do at Tomass is basically publishing, analysis, consultancy, and it's all related to cryptocurrency one way or another.
Mm-hmm. Tomass?
Hi, I'm also from Prague. I came from academic background. I did some research in credit risk modeling and derivative hedging. And last few years, I'm totally fascinated by Bitcoin, and I think it's the biggest invention in last
it's also an adventure.
Adventure too, in last couple 100 years, and. So last about a year, I'm fully in Bitcoin. I don't have any other job.
Okay. So, but you say it's such an innovative step. Why? Why do you think it is?
I think it's a little bit similar like invention of writing. It is technology which will completely disrupt how we cooperate as a society. It's much better technology than we have right now, I believe, but it's just the beginning. It needs time to develop.
Do you mean also in the technological standpoint, like from security side, comparing it to the classical financial technologies?
In many ways, in many layers, many ways. Education, technology, innovation on top of it. Many layers.
Okay, Patrick, what fascinated you with Bitcoin or in Bitcoin?
As I mentioned, I started to look at it from my fintech lenses first, so technology. So I went through the rabbit hole through that angle, but then it got me back to my studies at economics and business, and I actually now appreciate more the monetary policy aspect of it. Technology is just the way how it's delivered, but it feeds to what Tomass said, to how people are organized, and having a good technology for money has that ability to organize people better in a way that the hardness of Bitcoin versus the cheap credit that we're seeing outside, that's two different poles of how to get organized people. So yeah, so monetary policy is probably the biggest thing that's driving me, that we can actually with DEBNK help to build over Bitcoin a layer which would actually enable that to.
Until now, I didn't really get what DEBNK wants to do, because I mean, Bitcoin is like, don't trust, verify, hold your own keys and stuff. So what does DEBNK want to do?
I'll try to explain just the basic concept. It's just, we basically want to build or initiate idea to build with community a third layer over Bitcoin that we can use the word financialisation of Bitcoin, meaning using the store of value of Bitcoin and through the settlement layers like Lightning and Liquid or on-chain, have a third layer that actually enables you to build financial products out of Bitcoin with the Bitcoin as underlying. So using that, you can denominate any like synthetic asset on top of Bitcoin with Bitcoin as the underlying, and you can denominate any currency or stock or anything above Bitcoin.
But what's the difference to Liquid? Because with Liquid, I can also like issue own tokens. So what's the difference to the third layer?
Yeah. Here you use the Bitcoin as underlying, and on top of that you just account for different value. On Liquid you can issue like different stablecoins that already exist.
Well, on Liquid, if you want to issue some stablecoin, you have an issuer, and you have to trust the issuer. We want to allow basically any asset, but probably the most liquid ones, on top of Bitcoin infrastructure in trustless way.
So I don't have a central issuer?
Yes, exactly.
Okay. And how does that work, with smart contracts or?
No, our building stone is contract for difference. Basically, any possibility how to give up the exposure to Bitcoin, the underlying store of value, and lock it into other asset. So you can then store on Bitcoin infrastructure different assets than Bitcoin. You lock the value to dollars or euros or whatever, and your underlying Bitcoin amount of Bitcoin changes all the time, but you still have $10,000 if you lock $10,000. So instead of going into smart contract solutions like Ethereum, where you have tokens, here you can have you can lock the value to dollars using some contracts for difference, and the contract for difference has to be trustless and decentralized.
If I may add something, like the original inspiration for like this way of thinking, this line of thinking, comes from I think it's Dan Robinson's Rainbow Network white paper. And Robinson in that paper points out that you can actually create like an accounting asset on top of, for example, Lightning channels. And this accounting asset exists only as a contract between two parties, let's say. So, and the two parties enter something like a CFD, something like a contract for difference, where they define like the accounting asset, the amount of the accounting asset, and actually define like who takes the long position and who takes the short position. And as the price of the accounting asset compared to, let's say, Bitcoin changes, the parties settle the difference. so that, for example, one party holds $100 worth of Bitcoin all the time. And as the Bitcoin price changes, the parties settle the difference. So that's how you can hold any kind of accounting asset on top of Bitcoin with Bitcoin properties. And there doesn't have to be any intermediary.
I'm not from the financial industry, so I'm asking maybe silly questions, but what's the practical thing to do with it? Is it trading, or is it giving out tokens, or such a contract? What do you do with it?
It's not. You can use trading for this as well, but basically, a quick example. So let's say you're the hodler, and you want to take a loan against your Bitcoins, or to buy things, or you want to take a loan against your Bitcoin to leverage on Bitcoin to buy more Bitcoin, right? I'm the holder of dollars, and I'm searching for an interesting interest revenue. So we can use this contract for difference to enter into that contract where you go long Bitcoin, and I'm providing that dollar liquidity. So in essence, it looks like a loan. It's not a loan because it's CFD. It's a derivative, but you can achieve the same result as if you would be using a loan from BlockFi or taking a CDF from MakerDAO. So by that relationship, you can speculate leverage long on Bitcoin. I'm providing the dollar liquidity. I'm going short Bitcoin. For an interest. So I make my interest, you go long Bitcoin. And this creates actually the contract. When you can have that relationship with Bitcoin and dollar, you can have that relationship with Bitcoin and euro. And if you put these two assets together, cancel out the Bitcoin, you can suddenly arrive into an ecosystem that can trade euro and dollar only. So you basically could create on top of Bitcoin as the underlying, like a layer, like a mirror layer of today's financial system, with Bitcoin as the underlying, but have any asset that has a external price on top of it, without the need to have stablecoins.
And for me, the most interesting and immediate use case for that would be to hold Bitcoins, but actually enter hedge short positions. And let me illustrate with an example. If you are a business that wants to accept Bitcoin, today there are basically two ways how to do that. Either you incorporate something like BAKKT or any a point of sale gate, which handles the Bitcoins for you, and you never actually touch Bitcoin, you receive the fiat currency. But you have to rely on the intermediary, and you are actually not really using Bitcoin. The other way is accepting Bitcoin itself, for example, through BTC Pay server, which is a really great service for that. But still, the problem for businesses is you hold a very volatile asset, like Bitcoin still has this volatility. So it would be nice if you could actually receive the Bitcoin itself, but immediately hedge it, so that you receive Bitcoin, but it acts like a dollar, for example. So if you could have BTC Pay server and enter financial contracts on top of that, utilizing DEBNK, you could handle Bitcoins, but be basically shielded from this volatility. And if there were actually a bull market going on, you would probably receive interest for your short position.
Okay, so it would be like a solution for the volatility
that's one
problem.
use case. Yes,
yeah.
That's one of the use cases. And right now you can enter hedge short, but usually through central party like BitMEX or some over-the-counter exchange. So you have to deposit your Bitcoin somewhere.
Mm-hmm. So you're a financial analyst, as far as I've understood. How do you explain this kind of volatility in Bitcoin to people who are newer? Because most of the times people say you can't use Bitcoin because it's so volatile and everybody is holding it and nobody is spending it.
Mm-hmm. Well, since we don't have any like central party that could set the price or manage the price, what we see is basically the price discovery. As Bitcoin gets adopted and people find new use cases for it, and since the monetary policy is fixed, so that we don't have to trust any central party, its ultimate price has to be discovered. And it's basically the same thing that has been going on with gold for all of human history. So it's quite natural, and actually some people describe the price discovery as like a good marketing tool, because since the beginning, as people found the use cases for it, it went up. Basically, like the overall trend is that the Bitcoin price goes up. So and this attracts attention, of course. So it's also a nice like marketing tool, because every time there's a bull market, people start asking like, what's this Bitcoin about? Why is it rising in price? So it's a nice marketing tool, actually, like unintended marketing.
Do you see any signs that volatility is lowering, like getting less?
I think so. I haven't looked at like the volatility data in a long time, but it's going down. Like I think in like 2011 there was a boom in price. It went like from $1 to $30, and like a week later it went to $2. So like these crazy 30 times multiples, they don't happen anymore. And right now, if it drops like 10% a day or rises, people go crazy. But it's basically nothing compared to the early days.
Mm-hmm. But it might take some years until it's like more stable.
Yeah, it's a question of like liquidity and market capitalization. As it grows higher, it requires more purchasing power to move the price of the asset for the same percentage. So moving Bitcoin 10% was much easier when Bitcoin was priced like $100 than it is today when it's priced like $8,000.
There's a new model out there from PlanB, Twitter user, called stock to flow, which is predicting pretty high values for Bitcoin. So once the adoption grows and the market cap will get into trillions of dollars market cap or higher, the volatility will decrease until it will be pretty stable asset, so that instead of only store of value use case, you can have the means of exchange and unified account later on. Not now, but it doesn't have to take that many years, as you can see from the model. So if you go with that speed, we'll match the M3 supply of dollars in just a couple of years. If the model works.
Yeah, the model from PlanB is very optimistic, I would say. I guess you're also watching like things that are going on, and now BAKKT has started. Did you look at the development? I mean, I think in the first days, not so many Bitcoins were exchanged. Do you follow that, and what's your opinion about it?
Yeah, we do follow all the derivative space. Yeah, we looked at BAKKT, but not that much. It looks like a good addition to derivative, because most of the derivative exchanges are cash settled. CME is cash settled but denominated in dollars. All the crypto native are cash settled, but the unit of account is Bitcoin. This is the first exchange that's physically settled, which changes the game a little bit in a way that you just cannot you cannot do bigger nominal positions than the Bitcoins you actually have. So it's making shorting Bitcoin harder, and the arbitrages between BAKKT and other exchanges will make it a more efficient market. But we would have to go into details of derivatives a bit.
But why do you think that institutional organizations or investors didn't invest more? Because there was like hype with Bitcoiners who thought, oh, now BAKKT is coming and then the Bitcoin price will go up because everybody will use it then?
We're not experts in that, but there was a big hype in 2017 that the institutions are coming and that the infrastructure is being built. So there's one angle is probably infrastructure, like custody and regulatory clarity and stuff like that, which is growing and it's improving. But it looks like that institutions need a bit more time to en masse adopt this as an asset. There are institutions already in crypto, but probably not at that level as everybody would expect.
Well, I think that in most of commodities or most future and derivatives trading, the traders do not want to wait until delivery, and they just want to expose and trade. So in most commodities, cash-settled futures are much more liquid than the physically settled. And physically settled futures are good for businesses who really work with Bitcoins, regulated businesses who really work with Bitcoins. If someone just wants to get an exposure to Bitcoin, he can use CME already. So I don't see why the community is so much focused on BAKKT. I think it's nothing special.
So here in the Czech Republic, I'm sure you also have like banking regulations and stuff. How is DEBNK regulated? Is it regulated? Does it have to?
Okay, the basic concept of DEBNK is peer-to-peer banking, which means that two peers enter into some relationship which the apps and the protocol can facilitate, right? If we stay on that peer-to-peer relationship, then regulation can touch it in a way how these two peers can find each other. They can find each other through an exchange, which is regulated, which is not our case. Then there's the aspect of how they actually come to the terms, how they want to trade, or the terms of the contract, and then they enter the contract and how they manage it. We're trying to make DEBNK in a way, or the protocol, so that you stay at that peer-to-peer level outside of regulations. It's a bit complicated matter because we're touching derivatives here. But basically, DEBNK as a concept of how you can do the CFD contract, we can actually, you and me, we can actually enter into that contract today and we just can write it down on paper. We don't need an app or protocol for it. You need app and protocol to create a market and have liquidity, to share liquidity. But for that basic thing, we don't need anything, and we don't have to be regulated. So in certain applications or how you actually deliver that concept, you can touch regulation more or less, but we're trying to find a way how you would not stay out of regulations. You would be compliant, but that doesn't mean you will have to do KYC, AML, and some other things. So we're not trying to be not compliant. We're trying to stay compliant, but not impose KYC, AML in that ecosystem.
Yeah, hopefully. I mean, maybe now, but what in 5-10 years when regulators like have more like insight and know what actually you guys do, because I think a lot of the regulators don't really know what's going on and the new business models and new ideas and new projects coming up, and they're always behind, and then they come from behind and regulate more.
Yeah.
So that might be, but then you have just to change.
It might be, and that's one of the key reasons how we actually are looking into building it. We're trying to build DEBNK and very much close to the traditional Bitcoin ethos. Open source, driven by community. Monetization is not the priority. And we don't have a crystal ball. I mean, regulators can, regulate Bitcoin even. It's not run by a company. So it can be regulated later on, but now we think we found an angle how to stay compliant, but not use too much of regulatory limits.
Mm-hmm. And which kind of data will be required from your side, from the clients or the users, to make such a contract?
It's just Bitcoin based. So think of it like you would be trading on Deribit or other crypto native. So you don't need to use any names or emails, nothing.
Okay, so
you just take your Bitcoin, download the app, which is not live yet.
Mm-hmm.
You just download the app, use your Bitcoins, and you find a counterparty, and you enter into a contract.
Mm-hmm. Interesting. And you just said the app is not working right now. So where in which phase are you?
We've been working with the team for the last 12 months on the concept that you can see in the white paper,
mm-hmm.
which is basically the conceptual idea of the peer banking. There's no technicalities in it. Some team members already put out a way how to launch it over Lightning using distributed local contracts, and that's already published. We're thinking of now releasing how to actually implement it over on-chain, open source. We'll publish it soon, and we'll be trying to get community to help us build not the protocol, but the whole ecosystem. So another part we want to publish is the description of the whole ecosystem and the players that could play part in it, like we described, the financiers and miners, etc. And we hope that the community will pick it up and find the right spot for each to play.
But what's the business model behind for you? I mean,
will be different for every company that will be part of the ecosystem. So we started with we wanted to first create the MVP, the app, and we've done a little bit of coding, but didn't do much yet. So because we found out that we're actually creating something much bigger than just an app to go into derivative contracts. So we said, okay, we'll just publish everything what we have and have community, help us build it. And we will decide in which part of that ecosystem will be playing a role.
Mm-hmm. But it sounds like as if it's a global marketplace, because if I only have to put in my Bitcoin, then it doesn't matter where I live. Uh-huh.
Yeah, exactly.
Okay, interesting.
I'd like to add one thing. Like when it comes to regulatory scrutiny today regarding derivatives, usually what's regulated is the intermediary, the brokers, the dealers, the providers, and if there is a custodial relationship, if there is handling of fiat, that's what gets regulated today. Our line of thinking is we can actually provide the tools for users to create these financial contracts or derivatives without any of these elements. So we of course don't know what the regulators' outlook would be, and we will of course discuss this with lawyers before we publish anything the real product. But it seems basically we are inspired how, for example, Compound on Ethereum or DYDX on Ethereum or Hodl for Bitcoin, the exchange, how they handle stuff. And we can see that they like these basic elements that regulators usually look at. So I think it's a good starting point to just not handle fiat, not do any custody, and not be the counterparty or the intermediate.
Okay, just don't get near being like a financial provider in any way.
Yeah, that's the idea.
Yeah. So, and when do you want to launch? Is there a planned date or time, or is it work in progress?
It's work in progress. Yeah. What we want to launch is the papers first for the community to start building with us. So.
Okay. So now we're here at the Hackers Congress, and the motto is opt out. Do you think with Bitcoin we can opt out today, really?
I think, a lot of people already did opt out, but the utility of opting out depends on where you are in the world and what kind of services you are able to access. So, of course, it's quoted all the time, but if we take a look at Venezuela or Iran or Afghanistan, they have pretty bad national currency, and the inflation is actually higher than any kind of bear market in Bitcoin. So these kind of people have the ability to opt out today, and it's actually useful for them to opt out. For us in Central Europe, we don't have this kind of problem because we have low inflation for now. We have good access to financial services and credit. But I think if we look at the long-term trends, this can change in the future, maybe after next financial crisis. So it's good to stay informed about these kind of technologies and learn to use them, because it may come in handy for us as well.
And on a more personal side, how do you protect your privacy with Bitcoin or other cryptocurrencies, or in general in your digital life? I mean, has it a high priority?
Well, myself, I'm not, I wouldn't describe myself as a cryptoanarchist. I know my friends are heavily pro-privacy. What I like to do is general digital hygiene, I don't have my real name on Facebook or Twitter. I try not to share too much personal photos. I have a family, but I never share their photos online. I use Signal, private messaging. And for Bitcoin, it's always good not to touch exchanges that do KYC, or if you do that, then to perform the UTXO management, to be aware which part of your Bitcoin touch the KYC, and handle it appropriately, or mix it using Wasabi, for example.
Doing it CoinJoin.
Yeah, CoinJoin. Yeah.
Yeah. Okay. So, Josef, you're talking tomorrow, I think.
Yes.
Yeah? What are you going to talk about?
So my topic is it's called Bitcoin's security budget is adequate for now, and it's a look at the settlement assurances of Bitcoin, and why we actually trust that our transactions are immutable and irreversible. And I try to derive something like a metric for finding out if what we pay to miners is adequate to secure what gets transacted. I'm heavily inspired by works by Dan Held and Nick Carter and Hasu, and using only the on-chain data, I think I arrive at a good metric to find out whether what we pay miners is adequate. And this is heavily relevant when it comes to Bitcoin halvings, because the subsidy is going away, what the miners get from new Bitcoins, and we have to replace that by fees. And in 10 years, 97% of all Bitcoin will be mined, and fees will heavily need to take over, or the Bitcoin price needs to be much higher. And I think the relation between what miners get and what's transacted on chain, there's a good correlation. It's not random, because if we need to transact billions of dollars on chain, and miners would receive a couple of $1,000s, that wouldn't be safe. And actually, I think 1% of the daily transfers is about the adequate security budget. And I'll explain that in the talk. Why is that?
Mm-hmm. So you think that after the halving in May 2020, miners will still get enough money?
I think they still will. but it would be good if either price of Bitcoin went up to compensate or the fees went up. And the problems with fees today is they only make up 2% of the security budget. 98% of what miners earn is just the block subsidy. So and this over the years will start to be a problem if it doesn't change, because we need the fees to take over. And for the past halvings, it was compensated by the rising price, so that miners actually earn $20 million daily today, and it's the highest in history. But it's caused just by the subsidy and the high Bitcoin price.
Mm-hmm. Do you think that moving into a second layer, like into Lightning, will help? I mean, lowering transaction costs on the chain?
Well, we don't want actually on-chain, low on-chain transaction fees. We need high on-chain transaction fees. But Lightning can help in something that I think it was Nick Carter, he calls it transaction density, so that you don't actually care if you pay $100 for on-chain fees, because there's an economic activity of $10,000 behind it, and this economic activity takes place, for example, on the Lightning network. And something like DEBNK could actually help with that, because if you increase the transaction density so that you don't care about paying tens or hundreds of dollars for the fee, then it's good. Then it's on the good way.
But if I understand that right, when you say in a Lightning channel, 10,000 euros, for instance, then it might be 10,000 people or behind, or 10,000 transactions, or how do you mean that? And then the 100 euros for the transaction fee is divided by those 10,000 people.
Yeah, that's the nice part, that for the individual people, it's not a huge cost, and it's just a fraction of their economic activity. But if they settle, and I think they should settle over some period, it falls into the base layer, and the miners get their transaction fees. And if we have a lot of economic activity on top of Bitcoin, for example, on top of Lightning network, then we won't have this problem with transaction fees, because the utilization is actually that high that it pays off for people to sometimes settle with high transaction fees for this particular transaction.
And what's your pessimistic view about that? I mean,
well, some may say that altcoins could offer a good substitute for Bitcoin on-chain transactions, and then we could have a problem, because this could go on and on. That if some network gets high transaction fees, people would switch to another network, and we actually never would arrive at a safe, trustless, global settlement network. That would be a problem.
That would really be a problem.
Maybe to the opt-out question, I think we should be realistic, and practical. So for everyday people, opting out today, you can do with Bitcoin as a store of value. So instead of saving your money in fiat in a bank, just use Bitcoin for just a portion of your portfolio or savings, and have a pretty high chance that if Bitcoin makes it, you will make a lot of value out of it. But that's just for savings today, right? And then in everyday life, I mean, we'll use fiat most probably for a long time still. So opting out from the banking system is just it's not on the table yet. So we need payment cards. We need payment cards that can transfer, ideally Bitcoin to fiat at the time of the payment, etc. But yeah, so opting out, I think, is good in the store of value use case, but not in the everyday payment yet.
Yeah, and I think it's a good idea for people, maybe everywhere, to try to think about opting out of social security system, like the state sanctioned pensions, because it's quite a generally accepted idea that there won't be enough money to pay the pensions as they are today. And it's quite a mainstream idea. People are not surprised by that if I talk with people, but they actually don't know like what's the alternative, what's the way out. And I think Bitcoin is like I think it's Raoul Pal. He always says that Bitcoin is like a good, cheap option for the future financial system and actually state pensions as well.
So do you have any recommendations for our listeners about Bitcoin or other interesting economic books you read in the last time, educating in Bitcoin or other stuff?
Well, I just recently read a book from Paul Rosenberg. He's going to be at the Hackers Congress as well. It's called A Lodging of Wayfaring Man. And it was I was strongly impressed by that, because he actually writes about like opting out and creating a system of private commerce and like private security system, social security system that's completely based on like voluntary interactions and no coercion. So that's like a nice political philosophy basis for what Bitcoin is trying to achieve. And as for Bitcoin resources itself, I always loved the site put together by Jameson Loeb. It's I think loeb.net. So that's my recommendation for people trying to get serious about Bitcoin.
Buy Bitcoin and start asking questions. That's what worked for me. I mean, for me, the biggest thing was just buying it and starting asking questions, and it got me from technology to monetary policy back again. So I felt like back in school. But I've got one book it's called Inventing Bitcoin. I'm just actually reading it. It's from Jan Pritzker. And it's just like, if you want to understand Bitcoin from the ground up, he says the best thing is to try to build it yourself, sort of like on paper. And he takes you, it's in very simple terms, a book that actually takes you of, if you were about to build Bitcoin, what do you have to do? And by building it, you learn it. So it's really interesting book. It's not for techies. It's for just normal people, how to actually build it.
Okay, thanks. I will put that in the show notes for everybody to find. Last question. How is Bitcoin doing in the Czech Republic? I mean, are people interested, or is it more like a negative interest, like, don't care?
I think it's doing pretty well, because like we have a strong underlying network of companies and institutions in Czech Republic. We have Satoshi Labs. They are the authors of Slushpool and Trezor and CoinMap. And we have Parallel Polis. That's like the whole building of 4 stories that's dedicated to cryptoanarchy, Bitcoin, and privacy. There's a Bitcoin Coffee at the ground level of Parallel Polis, and I think it's actually the only coffee in the world that accepts like only Bitcoin, and I think Litecoin as well, but they don't accept any fiat currency in here. And we also have like a boutique attorney office. It's called Blockchain Legal, and they are focused on like finding legal, like how to say, like how the businesses can be sure that what they are doing is compliant in like a Czech environment. So we have quite a strong institutional basis here, and we have a Facebook group, for example, like Bitcoin community Czech and Slovak, and it has like 20,000 members, and I think they are quite highly informed. The price doesn't get discussed as much as like technical stuff, so it's pretty cool. Yeah, and I also forgot there's like this big chain of consumer electronics, Alza, and they also accept Bitcoin for like 2 years, and they run this series of educational articles about Bitcoin and altcoins, and it's like the top of the range when it comes to educational articles in Czech. So I think businesses are not afraid of Bitcoin in here. Regulators don't understand that much, but they are getting informed, for example, by the guys from Blockchain Legal, which can like talk in their language. So that's good. And generally, I meet a lot of people in Paralelní that are new to Bitcoin, and they get good resources in here, and they just don't have this idea that it's used for like drug traders or something. So it's good.
Yes, great. Thanks. And where can people find you, your project and the white paper, and follow you?
So our landing page is DEBNK.io. It's DEBNK.io. But we don't have much of the stuff in there. We have a link to our Twitter and a link to our white paper. So the main resource from us is the white paper and the paper describing discrete lock network, discrete lock contracts on top of Lightning Network.
You said before that you're looking for developers because it's an open source project. How could they write to you?
I think best would be hit us on Twitter, which has the Twitter handle DEBNK.io, at DEBNK.io. So that'd be best. Yeah.
Okay, great. Thanks. I will put that in the show notes too. And have a great conference and all the best for your project. And thanks for your time.
Thanks for having us.
Thank you.
Bye.
Thank you.
Thank you for listening. I hope you've enjoyed this episode. You can support me via PayPal, Bitcoin and Lightning at bitcoinandco.com/en/donate. And as always, this is a podcast, not financial advice. Please do your own research. If you like my show, please subscribe to it in your podcast player and share the episode on social media. You can find all links that were mentioned in the show notes on the website or in your podcast player. You can contact me also on Twitter, LinkedIn or YouTube. Goodbye from Vienna, auf Wiederhören. Music, start with Yes, Delicate Beats. Idea, content and production, yours truly, Anita Posch.